it basically uses Metcalfe's law to draw a parabola, and it's a nonlinear logarithmic regression, which most of us are really bad at. Math is hard. And long story short, it said it'd be $10,000 in value in November of 2017. Pretty good call. We hit it almost 6 days to the day. But then the price went all the way to 20,000 and then crashed all the way to 3,000. So the price was very different than the value. This same model says the value by July of this year will be around $100,000. And out 5 years from now, it'll be $250,000. Yeah, look, what's interesting is I say that the idea that any of us know what the price of any asset is going to be in the very short term is really kind of crazy, in the sense that one of the challenges we have for all assets is the value of something is relatively easy to determine. There are cash flow models for stocks and bonds, and there are dividend discount models, and there are other models for networks, and there's Metcalfe's law and all the things that people have applied to come up with what the value of the asset or the value of a network will be. The hard part is the price, because the price, as I stole a line from John Burbank, the famous hedge fund manager, price is a liar. And price is simply what two people decide to exchange a small amount of any asset for. It has nothing to do with the value. People exchange at low prices when it's below the fair value. People exchange at high prices, well above fair value. And it's like a pendulum, right? It spends very little time in dead center. It's usually too far to the left or too far to the right. Same thing true with Bitcoin's price. It's rarely on the value. And so my forecast is really about the value of the network. And the value of the network comes from the users, from the transactions, from the blocks, and all the things that we can put into a model. Now, what is possible, I won't say likely, but it's certainly possible, that like in 2017 and like in 2013, the price goes much above value in the fall of this year, because individuals come in. And what happens is all markets migrate ownership. The original owners of any asset are investors, right? They buy it because it's below its fair value and they want to hold it for the long term. And then as things start to move, the traders come in, and the traders are looking for things that are moving in one direction or another and have a shorter duration of hold. The problem is when the speculators come in. When the speculators come in, they only buy what's moving, and they really only buy what's moving up, and they use leverage. And so what happens is they push the price way above fair value. And in this latest cycle in December, January, they had some gamblers show up. And gamblers usually don't play in financial markets, right? They usually go to Vegas or gamble online. But because of the lockdowns with COVID, they didn't have any place else to go. So they gambled in the stock market, like GameStop and AMC, and they gambled in crypto. And that's why I think we got a little further away from fair value in the last couple of months than we should have. And that's why we've had this kind of vicious correction here recently.